Praveen, can we start? We can start.
Yeah. Joining us today through Zoom to discuss the Intellect Design Arena Limited financial result for the third quarter of the fiscal year 2020-21 ending 31st December 2020. The investor presentation and press release has been sent to all of you and is also available on our website. Our leadership team is present today to discuss the results. We have with us today Mr. Arun Jain, Chairman and Managing Director, Mr. Venkat Sarnu, CFO, Mr. Prabal Vasurai, Advisor to the Chairman and Director on the Corporate Board. He is also an ex-CFO of Polaris Group. Mr. Manish Makhan, CEO of IGTB, Mr. Rajesh Saxena, CEO of IGCB, Mr. Banesh Prabhu, CEO of Intellect Seek, and there are other senior members of the Intellect management team who are present in the call. Mr. Arun Jain would brief you on the result, and then the respective CEOs, that is Mr. Manish Makhan, Mr. Rajesh Saxena, and Mr. Banesh Prabhu, would comment on their line of business. Then we'll have a summary of the same. This would be followed by a Q&A, which would be replied by the senior members of the management team. On safe harbor, I would like to remind you that anything which we say, which refers to our outlook for the future, is a forward-looking statement, which must be read in conjunction with the risks the company faces. With this, I request Arun to give his briefing on the results. Over to you, Arun.
Thank you very much, Praveen, and thank you all the investors who have trusted the company over the last 5 years in this journey. Some of the investors may be new, so I'll just take you a few slides on the company overview, company Intellect journey, what is the business model, what is the industry overview, and key competitive strengths, and quarter under review and annexures. If I look at it, just to repeat this space, that Intellect Design Arena has the world's largest cloud-native, API-led microservices-based multi-product fintech platform, powered by AI/ML for global leaders in banking, insurance, and capital market. So we are the only company on the same architecture which offers a full spectrum of banking and insurance technology product through its 4 lines of business, which we call Global Consumer Banking, GCB, Global Transaction Banking, GTB, Risk, Treasury and Markets, and Insurance. Corporate banking consists of 5 product lines: digital transaction banking, which is a comprehensive suite, which we call DTB suite. Contextual banking experience is the ability to front end, making the digital front end for the large banks globally, which is CBX. Third product line is trade and supply chain finance, high growth line in the current line of business on global. And third is liquidity management solution, and fifth is the payments. So there are 5 different products which GTB led by Manish does. There are 5 products which are 6 products which is in the GCB lines, digital core, which is IDC, digital lending, digital cards. So there are 3 platforms which are there. Then CBXR on retail banking suite, digital wealth, which is a wealth cube, and central banking. In RTM business, we have a brokerage solution on Capital Alpha, Treasury and ALM, and then asset servicing, which is Capital Sigma. Then we have a underwriting solutions Exponent, which is completely first time in the industry, which is built on artificial intelligence, big data, one of the best rated product in Americas. Then risk analyst, and magic submission is about reimagine submission with the magic of AI. Besides this, we have a digital solution for government, the GEM software, we run the entire back office of GEM. And then we have a 2 technology platform, which is the foundational framework on which many products are built. One is called iTurmeric. It's a platform which connects, which integrates, build APIs and cloud native architecture. So it's integration, workflow, APIs in a seamless manner in a drag and drop model. So it's a technology which is helping us out to accelerate our deliveries. And second is IDX. IDX is a platform which is data platform which is built on AI ML, on intelligent data extraction and contextual synthesis. So these are the two fundamental platforms. iTurmeric gives you composable banking and IDX gives you contextual synthesis are the two platforms which is underlying platform which is being deployed to build up the entire product technology landscape of Intellect. We always keep on saying there's a 5-step to drive the sustainable and scalable product business. So what you are seeing in this quarter, because at least from step 1, which is around building a product around an identified market needs. Step 2 is winning first reference. Step 3 is designing branding and marketing, acquiring first 10 customers. Then we come to selling step 4. And then step 5 is partnerships and strategic alliances and mining. So this is a complete model which we work on. So typically it takes 3 years to move from step 2 to step 4. And some of the products are moving to step 4. That is driving the current revenues and profits what we are experiencing in the books. So just a minute. This is our fundamental model of phase of growth, Intellect 1.0. Our focus was creating a brand, recognition as category leaders, winning key deals. While Intellect 2.0, which is going to end in March 2021, we started in 2018 to 21. It was focused on industrialization of product, monetization, and customer centricity. This I've described you multiple times, but for the new investor, that was the focus for Intellect 2.0. 3.0 will come to you next time when we have invested it. We have a very smart board with Anil from Australia, Arun Shekhar is an independent director who was running a IT company, and New England with a extensive experience in running the banks and operations. Vijay Sampath is a leader in entire legal side, and Abhay Gupte, who was a leader for large CGI and EDS before joining Manipal Group right now. This is our management team. Our winning digital strategy, since company has focused on digital strategy way back in 2013, 2014, and that is also playing to our advantage. On the left side, we have a customer list, and right side, what kind of problem do we solve? This is our competitive landscape, the market opportunity. There's a big tailwinds which is there where buy replaces build. So a lot of customers are now looking for buying the solutions to accelerate their digital life cycle. The growth in the product business is moving from almost $20 billion to the $30 billion market size. And technology change is becoming imminent. COVID has accelerated this journey. Our competition in consumer banking is Temenos, Finestra, TCS, Finacle, and Oracle. In transaction banking is Finestra is a key competition, ACI worldwide, CGI in bottom line, Treasury is SunGuard, Finestra, and Calypso, and insurance is Carp Data and Plank. These are 4 areas in which we are creating moat for the company. First is around technology. Our technology is contemporary technology, which is cloud native, API ready, microservices based, open architecture, powered technology. And then, which is built based using design thinking, digital 360, very highly functional product with the largest number of user journeys, accelerated deliveries, and API ready and contextual products. So there are 5 pillars of the technology. On teams, we have a great global talent across the world. We have a talent. It's not just India based. We built up a lot of AI technologies from New York and a lot of GTB technology out of UK office, and then a lot of wealth business out of Singapore office. So we leveraged the best talent and best marketplaces, places where we harness the talent there. Stability of the leaders is very, very important. 200 leaders in the company have a 25 plus experience in this area, and we are diversity and nationality agnostic. On brand side, Almost every year, 50 analysts are covering us. We are ranked number 1 in retail banking and wholesale banking by IBS annual league table. We have a good customer base of 240 customers across 91 countries. The beauty of Intellect is that it's present in 91 countries. So you'll see how the win is there across the world. What will help is that financial industry is very regulated. So when you have to present in multiple countries, you need to modulate your product to a specific country. And that's a strength for Intellect. And our 58% revenues come from advanced market, where the margins are much higher than the emerging market. This is our brand chart, which I call it the complete brand chart, which is happening, where we are number 1 rated for the retail banking and wholesale banking. Then we have a Novarica, which is rated our IDX platform, which I mentioned, best in the world in underwriting space. Among all the 15 players, they are rated. So Novarica report you can access to. IDC has named Intellect Design as a leader in IDC MarketScape, Silent, a contextual ALM. We have a IIT report. So every Forrester, Silent, Gartner, so every analyst today is covering Intellect from a various award positioning and the product rating perspective. And that's a great brand building. Besides this brand building, which I have not put on a slide, is our IGTB Oxford School of Transaction Banking, which is another brand, and Cambridge School for Core Banking. So these two schools, Cambridge University tie-ups and Oxford University, is helping us out to create a great brand story for the Intellect. This quarter, once coming back to this quarter, I think our monetization trajectory is on, and all the principles of monetization is working perfectly in order. Q3FY21, the results: calibrated, predictable, and profitable growth. So 3 words are important: calibrated, predictable, and profitable growth. First success for the Intellect, which we celebrate for this quarter, is what GCB team has done, going to the territory called Germany, which is looking for very high quality architectural products for their market. Otto GmbH is the largest retailer in Germany, and they've chosen IDC, Intellect Digital Core and Lending product for their next generation technology need. And that's a biggest validation of our technology strength over any of our competitor, that a company in Germany where we don't have a footprint, no reference, is able to decide purely based on technology of Intellect. Same way GCB has done a second century hit on this, or second sixer, is getting an entry into North America. We told you GTB is the first to get into advanced market, and GCB entered North America by winning its first subscription deal for the IDC. Then Novarica rate IDX as an intelligent text ingestion solution for advanced underwriting, with AI and ML playing a larger role. During this on financials, these are 3 qualitative celebrations, and quantitative celebrations are our EBITDA margin has moved to 26% of the revenue. We highlighted to the market that we should be a 30% EBITDA company in next 4 quarters. So after first quarter, we reached from 24 to 26% is EBITDA margin. Our SaaS revenue growth of 28% in Q3 and 51% in Q3 FY20. So it's going very healthily, and we are getting product acceptance in various leadership quadrant. This is our numbers. Total revenue moved to 3.82 billion, 19% growth year on year in terms of the revenue. In terms of dollar terms, our revenue moved close to $52 million with 15% year on year growth. Our license, AMC, and SaaS revenue, all 3 have a growth. License revenue moved to 910 million. AMC is 745 million, 18% growth. and cloud SaaS revenue 418 million, 28% year-on-year growth. Gross margin is at 50% of revenue from 47%. EBITDA, I mentioned 975 million. And this quarter, we could able to get a net profit of 804 million, which is 21% of the revenue of Q3FY21. So our PAT margin has come to 21%, as against a loss of 114 million in Q3 last year, same time. Cash and cash position, we moved to 335. Effective operating cash flow moved to 335 million. Cash and cash equivalent 1837 million versus 121 million in Q3 FY20. Net cash as of now is 1.24 billion, as against negative of 1 billion last year, same time. Collection has regular, streamlined. It's coming to 3.48 billion. And net days sales outstanding is 124 days compared to 132 days last time. And investment in product development, which is capitalizes 283 million rupees versus 287 million. So it's stable at the same number. This is the same metrics where comparison is done in graphical manner. Over here, few points which I need to highlight over here, which is not a part of the previous slide, is around annualized EPS of 24.23 on 80 crore PAT margin. We have 10 deal wins during the quarter. There are 6 large strategic deals, 9 go lives, and we made some CSR contribution of 17 million, which is not a part of the previous slide. On YTD basis, our revenue moved to 11 billion, and license in dollar terms is $148 million. In EBITDA, total EBITDA for the year is 2.59 billion, which is a 23% for the last 9 quarters compared to 26% of the last quarter, but 23% on annualized basis, EBITDA is 23%. Gross margin is 6 billion. License is 2.5 billion. SaaS is 1.15 billion, which is a significant increase. And it's all built organically. AMC of 2.2 billion. PAT of 182 crore or 1.82 billion in the last 9 months. And net cash of 124 in the bank. Collection is more than the revenue. So collection is 11.19, while revenue is 11.04. So healthily, the cash is moving better than the revenue. Net DSO 124 days. Total investment in the product is 836 million. So our license revenue is 3 times more than the amount of license capitalized. So 2.5 billion versus 836 million. Annualized EPS on 9 months is 18.31, 20 deals wins, 11 large wins, 40 go lives, 27 million CSR. This chart shows the sustained revenue growth from December quarter to April quarter to June quarter after COVID, 359 to 349, 373 and 382. This is quite an important slide for you to observe as an investor. When I was talking to you that what is the license link revenue? License link revenue has a 3 component: license, AMC, and SaaS revenue. In 2015, our total revenue pool, 33% used to be license revenue. 15-16, it remained at 33%. 17, it moved to 36%. 17-18. 19-20, it moved to 42%. And 21, it moved to 53%. Now that's a big shift which happened in this year to move to cross the 50% line on license link revenue. This license link revenue is important because this license link revenue comes at a margin of over 70% or 75% based on the various kind of deals and that gives you the margin upswing of EBITDA 30% when I'm promising or I'm looking for 30% EBITDA margin is coming because of this license link revenues. On our financials side, the PAT was negative 114 million rupees. It became positive to 410 million rupees in March quarter. Q1 FY21 426, then 592 and 804. So it's almost doubled in last 4 quarters. Similarly, EBITDA for a small number of 36 in Q3 last time, it moved to 639, 713, 904 and 975. It's a healthy growth on EBITDA. Collections is a more or less stable. There was a good success in the month of April to June, where we collected highest money, 4.36 billion rupees. Net cash, which was negative of 1 billion to negative of 1.21 billion in the month of March, and then we start moving to positive territory, 570 million, 947 million and 1.24 billion. Our order book positions are stable at 12 billion, and ARR on cloud revenues now this quarter is coming out to be 1.67 billion, which is quite a good record. Repeat revenue from existing customers stood at 85%. These are details of the numbers. In this detailing of the numbers, what we have done is we simplified the practices of not or consolidating number of rows below the gross margin, selling and marketing G&A. We combine it. This is a standard world practice where people are comparing the numbers from company to company based on the input from the global investors. We combine them together under one line called selling, marketing, the SG&A as a one line and R&D as a next line. So that is a change from the last time of presentation, and rest of it is the same what we are showing it over here. So at this point of time, we look at it to give it a task to the quarterly business highlight. I think we just give it to the Manish to take over on previous slide. One second. Yeah, Manish.
Thanks, Arun. That was a good update from your side. I think from a GTB perspective, we've been growing the digital platform, the CBX platform, liquidity and payments, which we have talked about out of the 4 of the 5 products which had been consistently growing. Our youngest product was trade and supply chain finance. And very happy to share that the 2 largest transformations globally, one in Asia and one in Europe, is being led by us. The European implementation, now we are upgrading to the new SWIFT standards. And this is what most markets will drive demand upon. SWIFT is changing a lot of these standards on trade side, where we are ahead of the curve from a lot of other players. So that's driving that. We won another supply chain deal in Vietnam. And we won another deal for digital transaction banking in Jordan. This is our second deal in Jordan. Like I said earlier, we pick up a country and we go clean the country, take the biggest bank and then keep bringing every other bank. So we repeated that. Jordan is the next country in the region. We are repeating that. From a go lives perspective, the first deal we are talking about, it's a US bank, very large bank. We announced it and we've gone live in less than 8 months. So this is a classic story of where the opportunity came during COVID times. We won it during COVID times. We brought it up and we've gone live also. This shows the trust and the product readiness from a market perspective, which has been demonstrated very well. It's a fairly large size US bank. From that, when getting live in 8 months, really talks about the team's execution capabilities and the market readiness of the product. We extended our partnership with one of the top 3 Australian banks, where we run their liquidity management, and we've now started doing virtual accounts for them to extend their market leadership on cash side. one of the largest African banks. We're rolling out to more countries. And one of the new upcoming big, large bank in India, we've gone live with digital transaction banking. If you look at all these four stories, this is about, again, growing with existing customers and growing in existing market to consolidate the leadership position and establish the brand by execution, the trust brand by execution. And that's the foundation of growth for us. This is all enabled by our product leadership journey. Three new products we were able to launch in this quarter. The DTBM21, which is a market leading product. We've got 53 customers now on it. We brought out a new version on it with a very high performance and open banking standards. This will be in the next quarter available on the cloud also, taking our journey over there. On contextual banking, as we are scaling out to more customers, larger customers, like you would see with the likes of Apple and others, consistent upgrades on performance and self-healing capabilities. Those kinds of capabilities in the operating system are being built, which forms the foundation for us. And for virtual accounts, for the Australian bank, which we went live, we were able to bring capabilities where they can, for their corporates, help them do collections on their behalf or payments on behalf or manage their liquidity in a virtual account structure. So these are very significant upgrades to the software across three different lines of product, helping us drive our market leadership. We've been fortunate consistently being rated by analysts in the leadership quadrant, and that's kept our journey going very strong. Again, looking to see consistently trade finance, which is our youngest product, being bought by the largest customers as well as being rated amongst the best is a very happy story for us. And the US breakthrough, which we have been showing consistently, the analysts are also rating us very high. So that's talking of the ITA report. So overall, a comprehensive journey growth for the line of business. I pass this on to Rajesh to share even bigger successes of what's been demonstrated. Rajesh.
Thank you, Manish. So before I start, let me remind ourselves that GCB has 5+1 lines of businesses. IDC, which is our flagship product, which is open API, microservices based, cloud native, which has complete suite of core banking products. Our second product line is lending. The third product line is central banking. And this is something what we call as quantum banking, which is what we developed basis our RBI deal. The RBI, we run the core banking system of RBI. So that's central banking. We have an omni-channel platform for retail banking called CBX Retail, a cards platform, and of course, our wealth platform. IDC has been a well-established product, and I've talked about it in the last couple of investor calls, but I'm happy to share that this year we are seeing some good growth coming in both in our lending product as well as in our central banking product. And also, before I talk about this quarter, let me talk a little bit about how GCB has done YTD. From a YTD perspective, as I look back on the last 3 quarters successes, I can see that all our business drivers are firing and doing well. Let me talk about this quarter. I think Arun talked about it. Very happy to share that we have won a very large, let me call it mega destiny deal in Europe with Otto. Otto, for those of you who may not know, is one of the largest Europe e-commerce player and the second largest e-commerce player in Germany after Amazon. Their turnover in Germany is over 4 billion euros. So that's the size of this client. And they went through a comprehensive selection process wherein they looked at both international players and local players. Otto also has a large in-house technology team, so they also considered a build option before they decided in favor of us. The process also evolved a large 4-month POC that we had to do with Otto. and this was done on an agile implementation methodology basis, which they awarded this contract to us. So very happy to share that our momentum in Europe continues with a very big win in continental Germany. The second thing I'm proud of, and I think I am reminded a couple of quarters back, I think one of the investors asked this question saying, when is GCB going to make an entry into North America? Happy to share that we have entered North America with the first cloud subscription deal for a mid-tier bank in Canada. We will be shortly making a press release, a press announcement, and more details will come. This deal had 20 competitors, including international competitors like Backbase, Temenos, Kony, and Veripark. And this deal we have won against the best of best in Canada. Also happy to share that we have won a multi-million-dollar upgrade deal with a very innovative and a digital bank in Africa. This is a 4-country rollout. And what's interesting for us is that it's not only core banking, but it has core banking, lending, and for the first time, for me, cards will be making an entry in Africa. So these are the 3 big deals that I wanted to talk about in this quarter. But more importantly, as I look in future, we continue to be well positioned in Destiny deals, and our Europe momentum continues. From a product leadership perspective, you would recall that we had done a IDC 19 launch. We are now ready to do our next version of IDC 21 launch. Wait, you will hear from us shortly about this. This product that we have developed, IDC 21, is its first of its kind. It's completely open API, microservices based, and completely cloud native platform. Very interesting to see how this takes on in the market. We are also, while we've done this for IDC, we are also working on making a lending and cards platform also completely cloud native. Makeover is going on right now. Also happy to do, though we've had multiple implementations, but I want to really talk about 2 implementations today. Ali Bank, which is a bank in Qatar, and Utkarsh Small Finance Bank. It's a bank based out of Varanasi in India. Both these banks went live with our upgraded CBXR, our digital platform. And I can say that the customer experience, the user experience, and the feedback that we are getting from the customers of these banks is very, very positive. From an analyst perspective, I think our product coverage continues, and happy to share that this quarter we received from IBS the most impactful project in digital lending for our client SVFC in Vietnam. So that's a short summary about how GCB has done in this quarter. Very, very good quarter from a GCB perspective, a good year from a GCB perspective, and cautiously optimistic about our future. With that, let me pass it on to my colleague Banesh.
Hi, thanks, Rajesh. That was an excellent update on GCB. So I'm going to talk to all of you about Intellect Seek. Now, Intellect Seek is often referred to as an insurance business, but it's actually at the heart of this business is that it's 100% cloud, it's fully 100% subscription, and the data platform is at the heart of this business. And it's used a lot in insurance. We've got, in this quarter, we had a 10th customer. Most of our customers are in the US, but this was a first customer in Australia. And we refer to that customer here as Blue Zebra, which is actually empowers Australian brokers. We also tied up with Credit Watch, which is a company that does business calls as well as company checks in Australia. They actually wanted and were really happy with our 8,000 data sources that we have, the capability for us to be able to access and look at data very easily. And they tied up with us to supplement their credit scores for businesses with the data that we have available on our platform and to leverage our platform to do that. This quarter, we also went live with Ameritrust. Ameritrust is a national US national commercial insurance underwriter, and it's one of the more successful underwriters for PNC insurance. We went live with our Exponent, which is our underwriting workstation, along with our data platform that integrates together to help them, triangulate the data and use the data for better underwriting. We also went live. Actually, Amerishore is another client of ours who actually came back and requested us to extend their contract instead of 3 years to a fresh contract for 5 years, which is again based on cloud and subscription in the US. Amerishore is, one of the leading commercial insurance companies focusing on construction, manufacturing, and healthcare. And I think they were really happy with the quality of the data that we gave them and how we integrated the data along with their existing underwriting platforms. And then finally, Liberty, which is one of the largest insurance companies, worldwide with revenues well over 43 billion, actually chose for 3 lines of business and went live with our IDX platform. The IDX is an AI platform, for those of you who are not aware, and we call it Magic Submission. Magic Submission was launched for all 3 businesses in Liberty this quarter. And in addition, Novarica, which is an independent analyst, rated this particular platform from an AI perspective as one of the best, and therefore they rated it. There was nobody else they felt in that category, and therefore put us in the Northeast, quadrant of their analysis as one of the best systems in excellence in intelligent ingestion as well as extraction of data. Similarly, we've also been able to launch in Australia on our data platform the ability to access data in a few seconds. It was first done in Australia, and now we're launching it this month in the US. There are a lot of customers in our present discussions in progress who would like to access data on our platforms. Then the other piece I wanted to touch on is the Intellect Idx Platform that you see over here, which was rated as the best AI and machine learning provider. It was highly commended in the UK in their 2020 Technology Product Awards. We feel really good that our platform is ready from an AI perspective to be able to extract documents of all types, whether it is electronic documents like PDFs, Excel, Word, or documents such as paper, fax, etc. Extract it and then validate some of that data from external and internal sources, and then ingest it into their destination platforms as a seamless process. So it was very well regarded. So I thought I should, touch on these key areas. I think that was what we achieved in this quarter.
Thanks a lot. So just want to highlight on Seek data platform. The beauty of the data platform is it's contextual, able to do intelligent decoding of the text, while the companies like Kofax and Abby, so Kofax is a key competitor in this space. They have a coordinate-based extraction. So to explain all these technologies from GTB, GCB, and iSeek, we'll have a technology day maybe next month, and we'll invite you all who are more interested in technology, because it's a technology company, and we cannot spend too much time on explaining the technology in this investor calls. So in this, on a final other businesses, which are smaller size businesses, which are there for next quarter, we are looking for, we have one, Intellect Wealth is emerging as a very, very solid platform, which is completely API based. It's been launched on Singapore Epix, the open platforms, and it has got more than 50 APIs on wealth side. So this platform has won the large deal in Indonesia. Capital Sigma, which is our asset servicing platform, this is being chosen by a top private bank. They have graded the new platform and the new technology. And one important point is GEM portal has crossed 10,000 crore of GMV in last quarter. There is Analysts which have rated Treasury in the best implementation category, improving automation in innovative categories, and Intellect Wealth announced winner in 2020 IDC FinTech Ranking Real Result Award for Digital Wealth Transformation for CIMB Thai Bank. So it's a very, very important thing. CIMB is the largest Malaysian bank. And product leadership journey of brokerage is continuing on the cloud platform. So it has been transferred fully on cloud. So brokerage platforms are very old platforms. So this platform is a new platform on the brokerage side. This is just a highlight of how various deals are there, which has been described. So I'll skip this slide. Over here, same 6 deals which are talking about in various geography areas. There are 9 implementation which is being talked about, which are completed new customers live sites. Why live sites are important from a context is because when you create a live site in a country, you have a new prospect get generated, a new sales funnel get created. So this live sites is a very good indicator for ensuring that your company product footprint is going to a larger community. And implementing in 8 months' time is an amazing time for any large project like this. This is just showing the world that how Intellect is differentiated from our competition. Finistra, some companies are Europe focused, some companies are America focused. We have an advantage of similar advantage like Indian IT services are there. We don't have a choice. We have to go out for making our money. India is not a strongest market for us to make money. So we are present from Australia to on the lowest most corner of the slide, right corner and topmost left is a Europe. We are present in all the continents very, very effectively. And that's where we are seeing the black pins describe the going lives and blue pins describe where we win the deal in a quarter. We will do it on annual basis also. This gives a good understanding of how our penetration is going step by step in these countries. And once we build up all the payment networks, we build up bill payment systems, we build up regulatory frameworks, it becomes much, much easier for us to code the deal win the deal because of reference, and our implementation cycle time becomes much lower and profitability substantially improves in those countries. The market share is similar to last quarters at 60-40. It's become 58-42 in this quarter. It was 62 last year, 62-38 last quarter. But more than 60% market share is advanced market. Again, first lever is license link revenue for the profitability. Second is a advanced market share of 60%. So these are the two core strategic lever which I described to you in 2015 Investor Day. It's almost 5.5 years back when we described the company strategy. We looked at it that we need to make two things 60%. Advanced market and license revenue to be 60%. We are still at a 53-54% level. We need to make it to 60% and advanced market 60%. 60-60 is a good recipe for the good growth margins and EBITDA margins of crossing 30% plus. If you look at the collections and DSO, advanced market DSOs are just 67 days versus emerging market is 218 days, India is 171 days, effective is 124. So our 58% business comes in a very good cash market, while other businesses are great, but other businesses' presence is important to get a global texture. So we are not saying that we should go out of the emerging market or India, but it's a kind of a nature of business. By balancing the portfolio, we are able to manage this portfolio. The pipeline is healthy. It is moving. Our nature, we are not increasing the substantial pipeline because we need to do a more qualified. So once we enter the deal, we look at it more aggressively on the deal, and it's growing from 36 billion to 41 billion in last 1 year. And we are careful in choosing what deals are right for us. Our Destiny deals has a capacity around 40 Destiny deals we are able to run with our current management team, and this we further will enhance it. As of now, it remains at 41 deals in spite of winning 6 deals in this quarter. So, and then 8 new deals has been added. This is a trajectory of how the deal movement is happening. This is a product assurance of what we happened in the quarter. This is around currency. All the various currencies are stacked up. Our 19% is GBP and 15% is Euro and 35% is US. So US is 1/3 of the total revenue. So with this, I'll open the platform for question answers.
Thanks, Arun. Now the forum is open for the Q&A. In case you want to ask a question, please click on raise your hand. I repeat, please click on the raise your hand, and we will allow you to be the panelist. You can ask the question. So first in the line is Mr. Baidik Sarkar. Rohan, please take him to the panel. Baidik, you can ask your question.
Arun, good evening and congrats on a very strong quarter. What explains this momentum in license wins? The whole of FY20 saw muted traction in licenses. So is this the result of that pent-up activity, or is it the new environment that is reducing evaluation and adoption cycles?
I would say you have answered both the questions. First is the healthy pipeline, what we are looking at it, qualification criteria, the way we pin down the deals like auto deal or North America deal, the amount of intensity we go through. So our win rate has been much, much higher than last year. And secondly, I would not say just because of the quicker evaluation. Nobody wants to do quicker evaluation. I am saying the evaluation has become much more intense. They are going on functional richness as well as technology quality of the products. Our advantage of technology quality of the product and technology architecture, what we invested in last 3 years. So our platform is a contemporary platform, which many other competitors have not invested into it. So when we are investing in last 4-5 years and we had a bad times from the result perspective, not bad times from the internal perspective, but result perspective, outcome is now getting more visible because now cloud is become very, very intense. AI machine learning is intense, and all those investments are paying off.
Sure. Thanks for that. So which brings me to the question, in guiding for earnings growth of over 30% over the next 2 fiscals, what are the lead indicators that you've assumed on license traction? And what additional levers do you expect to contribute at an OPEX level to meet your margin endeavor as well as your earnings growth endeavor?
So, Patrick, we described in June quarter, we mentioned to you that our cost has now stabilized at $40 million a quarter. We are still maintaining around $40 million. Pre-EBITDA cost of 284 crore is at $40 million level. So these numbers are not going up. So if you just plot the numbers of growth based on even 10% growth will give you 30% EPS growth in coming years.
Sure. Thanks, Arun. Best wishes.
Thanks, Vaidik. Next is Mr. Rahul Jain. Rahul, please ask the question.
Can you guys hear me?
Yeah.
Yes. Congratulations on great execution. First question, you shared about this 5-step which you have also articulated in the past, and you also shared that geographical map with pinning around in terms of go lives as well as some of the large deal win. So and this quarter also saw the German deal coming up. So with all this thing point in mind, which are the new region, product, anything incremental that you see? Because of course in all the business slide, those informations are coming up in terms of the variety of product, clicking the right spot, the insurance going into the Australian market. So a lot of these things are happening across the business segment. So which area you think you are pretty confident? Because looking at all of this, 10% outlook look like a very very conservative thought. So is it more about that it's difficult to predict kind of a business which is leading you to be so conservative, or it is more about not getting the real large deal which you've been doing in the past, which is stopping you to call it out much more aggressive on the growth?
Rahul, I think the market uncertainty are still some of it is there, and a lot of things are license revenues getting translated to cloud revenue. So SaaS revenue growth is much higher, which has a higher realization going forward. So I'm saying if you are pinning it for a EPS guidance, which Baidik has asked a question, and same thing if I want to do it, then how the 30% EBITDA margin growth will happen or PAT margin growth will happen. That is what I was answering to. And definitely we are looking for a growth. At least we have designed the company for 20% growth. It may be anything, double digit can be good for the next coming years. Last quarter we did almost close to 20% growth in rupee terms, 15% growth in dollar terms. So I think that momentum is there. So, but I think we burnt our fingers so much that we don't want to guide anything. We want to build trust with you.
Right. It's coming back big time. So this year has been very great. So great leaders find opportunity in tough times. So Manish, the next question for you. Of course, you shared the kind of deal that you won during the quarter. But the real big ones which we used to hear more often earlier. How are those shaping up? Are those still kind of in hold kind of a zone given the market we are in, or any other flavor you want to share there?
Rahul, both the things, the big deals are there, but like Arun said, one of the things is there's a very significant pressure to move towards a subscription cloud. So that's shaping a lot of it. In short term, it doesn't sound very right from that perspective. But building a business on a medium term, long term, I think that's the natural trajectory we will go through. Like I said before, we started with the insurance business, we went with the consumer business. The pressure to move the transaction bank business also to that is there. So hope to announce some of those very, very shortly.
Right. So that impact on your deal announcement value, what should be the shrinkage you see, at least on the announcement side? Of course, we know that the total lifetime value would not change. But
actually, lifetime values are growing, Rahul. It's
yes, of course.
an opposite one.
Yeah, that's the whole idea, right? But
yes.
But from a pure announcement point of view, if you were to announce a deal in format A versus format B, what is the contraction, at least from an announcement date point of view, we may see?
So Rahul, I'm trying to keep the portfolio still balanced between the license piece and the subscription. We don't want to immediately move 100% to that. So you will see both the announcements.
Right. So that will be much more smoother.
I think one thing we have all as a team learned is to become predictable and to become consistent growth versus showing spikes. I think that's what you guys are rewarding us back with. Consistency is most important. And part of our business management is to manage the portfolio.
Right. Thank you guys. I'll come back in the queue.
Thanks, Rahul.
Thanks, Rahul. Next, we have Mr. Mohit Jain. Mohit, you can ask the question. Please unmute him.
Now?
Yeah, Mohit.
Okay. Sir, just one question on your operating metrics. This advanced market share. Now, in the last 3 years, it is just falling from, let's say, 65% to 62 to now 58. And this is one thing which deviates us in terms of our revenue contribution and also the receivable contribution versus the rest of the industry. So what is your outlook? And this is not from a quarterly perspective, but let's say 2 years, 1 year, whatever time frame you guys are comfortable with. Do you intentionally make it converge with the industry number, or do you think this advanced market may remain very different from where the rest of the industry is?
Service industry is different. Service industry is not correct. Our global presence is there. So 1/3 business from emerging market will always be there because this ratio will be 40%, 42%, 38%. Those are depending on the deal to deal on a quarter to quarter basis. I think 2/3, 1/3 business, which is in the ratio of IT spend from the fintech industry. If you are in line with that, that's okay. But for IT industry, what you are referring to, Indian IT service industry, that's not a right relevance because the outsourcing deals are around that area.
So 65-70 from advanced market is not something that we are even targeting.
We are not that
Unrealistic.
65% is a good number to look at for the advanced market, and if we sustain it, our global presence will be there. Then we can go into the some of the deals which are more. We can use our products for getting into the real fintech spaces. Once we get a market share of Vietnam or a Thailand or a Jordan, or there is a much bigger potential emerging in 4.0 of Intellect. 3.0 will start, but 4.0 can be very different looking business, because in developing market, one can lead the business very differently than what we are leading today. We are selling licenses right now. That time we can sell the payment services or a trade finance services or supply chain services. That is the kind of a overall 10-year perspective in which we are looking at. So Mohit, that's where emerging market is important, and 1/3 business is quite good balanced portfolio for us.
Okay, sir. Thank you. That's all.
Then next we have Mr. Nandan Madiwala. Nandan, can you ask your question?
Yeah.
Please?
Hi. Congratulations and thanks for taking my question. So I wanted to understand the funnel that we have given, which is around 41 billion. It has jumped from around 36 billion. So does this include, is this only license revenue or it includes other revenues as well? And corollary to that, I guess, if more businesses evolving towards SaaS revenue, is it understating this funnel in some way?
Yes and no, but I think this funnel which is growing is a combination of license plus implementation charges plus some other cloud deals. But we don't take a full 10-year cloud deal. We take only 2 years of the cloud deal as a value in the funnel. So that's also, if I start taking 10 years of the cloud deal, then the funnel will look very large. So it will be disproportionate. So if the 2 million, if I were signing 2 million annual deal, 2 million annual deal will become $20 million on the funnel. That necessarily create anxiety in the system.
Okay, I understand. And one more question regarding the license revenue recognition. So is when we win a deal, how do we recognize the license?
We recognize on the same quarter when we win the license.
It would be recognized in the same quarter. So again, a corollary to that. So when we show the large deals, which are 20 to 30 or 30 to 50 and 50 and more, those numbers are again sort of license plus implementation kind of a number.
Right, that's right.
Okay. All right. Thank you and all the best. Thanks a lot.
Thanks, Nandan. Next we have Mr. Varun Arora. Varun, can you ask your question, please?
Hi, can you hear me?
Yes.
Yeah.
Yeah, congratulations team, great results. My question is regarding the US market. So in the past, you've spoken that US market is one of the toughest market to crack. And for cracking US market, one needs to challenge the status quo. You've spoken about, the AI and machine learning as a focus area for the US market. So I just wanted to understand, and we've also spoken about a broad range of, revenue potential that we could get from the US market if few things, click for us. So I just wanted some clarity, in terms of the drivers for US market growth. Are we close in terms of getting the traction as far as our Seek product is concerned? Uh, 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 so how's the traction there? I noticed that for GTB we did win, a deal in US, so that's good to see. So if you can just give some sense of the opportunity that is there in the US market and the traction that we are seeing.
So thank you, Varun. I think you are tracking all the conversations of Intellect. So I appreciate that you are tracking what I said 4 quarters or 6 quarters back about US, and that's how I think important investor is that who can understand the whole journey. So I said that it's important that technology become a differentiation, because if you have to crack the US market, they can only love the technology. They cannot love anything else to crack. And many European companies have not able to crack US market. It's the most difficult market. So AI machine learning was the only way to get into the US market, and Banish and Seek has done a great job in putting that on the roadmap, where all the analysts are loving our data platform, because data was new to them. Our data platform is similar to Palantir. Last time I mentioned to some of the players, Palantir has gone public. So if you want to track what Palantir does, Palantir has a valuation of $60 billion as of last week. It has went public 4 months back. That is a platform we built. We have taken, Pranav has taken a huge bet on building this platform, Varun. And with that platform, if it was that quality, and then we applied domain specialization on it. So we built up a data platform and then applied insurance vertical onto it. It becomes a unique platform for America markets, which they cannot refuse. Now we have got a 2 senior hire in America. We have a 1 senior hire, Jim, who has joined us as a leading the insurance business leader in America, who comes from Liberty Insurance. He is a customer joining us and telling the story to another 20 customers. And then we have Kyle has joined as senior sales director in America. He comes from a data company called Verisk to expand our capacity in America. On GTB side, our platform of cloud native ingestion-based technology is first of its kind of a contextual reference. When you place a cursor on the screen, you can get an analytics on it. There are hardly anybody in the world who can have a corporate banking contextual experience available on the movement of the cursor. And that's a technology which is built in Americas, and we invested a huge money by setting up a team in Americas, and we have a team from Portugal, we have a team members from UK, team member. So multiple country has designed those technologies, and now those technologies are playing the game. Similarly, GCB has built up similar technologies, which they got a deal win on subscription basis in North America. So I think all these efforts which we put in last 5 years to get entry, because we knew America we can't ignore. How difficult it may be, you need to go there. And that's how it's playing off. It's still an early game in America. It's still very early in America. America can give us a huge traction if we succeed well.
Arun, just adding, we won 2 liquidity deals last year. Very, very large US institutions.
Yes, sure. My second question is regarding, I just wanted to understand the broad difference, nothing specifics on financial, but broad difference that could be there between the Intellect 3.0 journey versus the 2.0 journey that we are currently in.
So 3.0 will be more of a monetization. So if you look at it, 3 elements, 3 levers, which are industrialization, monetization, and customer centricity. So first, Intellect 2.0, first 2 years we spent on only industrialization of the product implementation. The 8-month implementation with Manish is talking in America, it's a unheard of implementation cycle time. And somebody asks a question, how do you measure the quality? This is the way we measure the quality, that what is the cycle time of implementation? Because customer, as soon as we get a predictable implementation for the customer, he gains a huge amount of dollars over there. So our win ratio goes up substantially. On the, sorry, I just skipped the second question.
Sorry, the question was regarding the broad difference between the Intellect 3.0 and 2.0 journey. The question is in this regard that a lot of our products actually currently, if we look, are in the monetization phase.
So more and more will be 3.0 will be monetization, more and more monetization, and more and more customer centricity.
Sure.
So how do we 240 customers what we have? How do we expand the cross sell in those customers and monetize it?
I think how we cross sell more, how do we sell more into the markets we are present? How do we sell more closer to the adjacent markets? How do we get on to cloud? And I think we may have been cross selling individual lines of business, but how do we cross sell the entire Intellect? So it's distribution, marketing, growing. All of that is the focus. I think, like Arun said, in the next quarter, we will share more details on it.
Sure. And if I may squeeze a quick one, I wanted to know the revenue contribution from the GEM product. I saw the GMV of 10,000 crores. I wanted to know the revenue contribution this quarter, and if you have last quarter's number.
We don't announce separate numbers, so as of now, so just you need to.
Okay. Thank you.
Yeah.
Thanks, Arun. Next, we have Mr. Vivek Charoria. Vivek, can you ask your question, please?
For the opportunity, I just wanted to get some more color on the top line growth. I know, I try to understand when you said that you've burnt your fingers in the past. But if you could share more color as to for the next 2 to 3 years, because the range is quite wide from like double digit can be 10% to 20%. Can you just give me a color on what sort of a top line growth rate can we expect? And on the margin side, once we do hit the 30% mark in the next 2 to 3 quarters, do we have more levers to expand further? I'm just trying to understand a more broader 2 to 3 to 4 year outlook for that. Thank you.
Yeah. Vivek, as an investor day, we think that we design the business for 20% growth or year on year. But for a purpose of investor day, we would say anything between 10% to double digit numbers. So that is, we are not able to predict as uniquely as we would love to have. On margin levers, iFlex makes a margin of 40% or 45%. So EBITDA margin going up to 40%, the levers are available. It may be one by one. First, let's cross the bridge of 30% and then we move the lever next level, because subscription deals on one side will not grow on the top line, but it will help in grow the bottom line.
If I could just keep squeeze in one bookkeeping question for the next year, I'm guessing we've used most of the losses on the P&L. What sort of a tax rate should we expect on a console basis for the next year, for the next few years? Right now,
still quite a lot. Venkat Sarnu, we have still a tax losses of around 300-400 crore is available.
450 crores losses are there.
Okay, thank you. Thank you so much.
Thanks, Vivek. Arun, we can.
Yeah, just two
more questions.
Two more questions you can take. Yeah.
So next we have Mr. Mayank Bhavla. Mayank, you can ask your question.
So what was the provision for doubtful debts this quarter? Because it's clubbed under the operating expenses now.
Based on international practices, what we look at it that this doubtful debts are not published as a number from all our competitors, because that being misused in some scenarios. So we stopped. We are merging with the sales and marketing expenses on provisions.
Sure. So just one, if I could squeeze in, earlier you had said, just clarifying, you had said between 10 to 20% growth is safe to assume, right, for the next 2 to 3 years.
Sure. That's right.
Thank you.
Thanks, Mayank. Next, we have Weber. Weber, you can ask your question, please.
Yeah. Hi, sir. Thanks for providing the opportunity. So just a kind of quick follow-up to one of the earlier participant discussion on the US market. So you said that even a lot of European companies had trouble entering US market, but if you look at the companies like Temenos, which has entered US aggressively from 2012-13, they've been able to build their business quite well in US, and if I'm not wrong, they have been giving a very tough time to Oracle in the financial services business. So just wanted to understand that what they have done so uniquely that they've been able to gain substantial ground, and what we have learned from their journey, because going forward we have to compete with both of them, Oracle and Temenos, from a longer term perspective, 5 to 10 years down the line.
The US business is very different now for us. We are looking at US business not in terms of Temenos and Finestras to us, that is not a contemporary player. If you're looking for a Kofax, Palantir, those are the companies we are talking about in US to compete against. We are talking about local US players in a Manish in a local Q2 and other players in US business. So the European player like Temenos have grown by acquiring the company there. So it's not an organic growth.
So we've done 2 acquisitions in US till now, and if you look at all of them are targeted towards bottom of the pile to get the community banks. They're definitely eating into what is called a FIS, Fiserv, or a Hogan territory. But look at what's been the success on mid-size and large-size banks, and where are they headed? I think if you ask inside, you will hear a very different news of the investment made in this acquisition. Is it paying off truly or not?
Right.
If I can just add, Vaibhav, I think what Manish said is absolutely right. If you really look at Temenos and Oracle, and you look at the business segments that they've been able to make a dent into US, the story is very different, right? They are really, whatever they have done is basically based on a couple of acquisitions and bottom of the pile. They haven't been able to crack mid-tier and large-tier banks in US.
Okay, sir. Yeah, that's it from my side. Thank you.
We can close the call, Arun?
Yes. Prabal, if you want to mention any summary, Prabal.
Yeah, sure. I think we have covered most of it, but essentially, I think for the investing community, the high-level message, which I think will be useful as far as this quarter is concerned, is essentially that we are still on our path of calibrated, predictable, and profitable growth, which is what we had promised you about more than a year back. So we are steadily on that path. And the beauty of our product model per se is that there are 3 distinct phases: investment, industrialization, and then monetization. So once we arrive at the monetization phase for specific products, it is clearly an operating leverage play, which is what I've always talked to you about. And it's an operating leverage play of steady revenue growth, but disproportionate growth in EPS. That's the model. And that is the model which is playing out for few of our products. And to answer an earlier question, what happens in Intellect 3? It'll be more of the same with the other products. So far, we have just scratched 2 to 3 products at best. So there are many more products in the pipeline which will play on this. And remember, we're a technology IP company. So with IP, when you control the IP, there are many, many models which are possible. So Intellect 3 will see some of that, I'm sure.
Thank you, Prabal. There are 2 questions which are there around peers are getting high valuation. Valuation is not in our control, but yeah, to list in NASDAQ some components, some parts. As of now, we don't have a plan, but those opportunity will be available as we move forward because of IP company, as Prabal mentioned. Update on IBM Alliance and other partnerships. I think those are going healthily. Some of the deals we are now working with Azure, some deals we are working with AWS, some deals we are working with IBM. So it's all the players are working healthily on the partnerships. So any acquisition plan? No acquisition plan. And that's what I told clearly. We are at IP company. We'll be looking at acquisition maybe after our organic growth plans are stopped doing organically, we have sufficient opportunity on the product landscape to grow organically and to remain the culture of the design thinking intact. So product companies need to have a strong culture. Apple culture or a Google culture doesn't come with acquisition. So we need to select very carefully. So we don't want to look at acquisition. As of now, when we reach certain size, we may think about it. Okay. Thank you very much.
Thank you all of you.
Thank you all of you
Thank you.
for participating today. Now you can log out. Thank you.
Thank you.
Thanks.
Thank you.